Okay, so we all love ourselves a bit of Vanguard. They're one of the biggest and most trusted investing names in the business, but there is a wider world out there when it comes to investing, and there's loads of other index funds that we can actually invest our money into. And that's why I've put together this list, which has some of the most popular non-Vanguard index funds in it, a lot of which might actually save you some money with lower fees than the equivalents from Vanguard themselves. I'll make sure you get the name of the fund, the ticker symbol, so you can find it on whatever platform that you want to use. And also I'll show you some high-level details like what's inside each fund, and most importantly, what the ongoing fees are. Let's first start global, and I've actually got a couple of options here for you if you're the kind of investor who just likes to own everything and just forget about trying to work out which country to invest in or which industry is going to do well. Now, we know Vanguard have the super popular VWRL fund here, so we've got some stiff competition, but check these two options out that I have here for you. First up is the iShares MSCI All World ETF, and this can be found using the ticker symbol SSAC. It invests in both large cap and mid cap companies across 23 developed countries and 27 emerging market ones too, and currently has more than 1,800 companies inside of it. At the top, you'll see major players like Apple, Microsoft, Google, Amazon, and more. And as usual with index funds like this, it's based on market weight. So the larger the company, as you can see, the bigger the slice of the fund that gets invested. Now, a couple of things to note on this fund, and for most of the funds I'm using today, I've tried to use the accumulation version where possible. Now, as a recap, if you ever see AC or DIST in the name of that ETF, that either means accumulation or distributing. And all this means is that when the dividends are paid, they either get reinvested in the accumulation fund or distributed, i.e. paid out to you in the distributing version. There's no better or worse, but personally for me, if you're a long-term investor who can't be bothered to manually have to go into your account and reinvest the cash, or you don't actually need the money, then I'd use the accumulation version. Anyway, on cost, this fund has a 0.2% expense ratio for every £1,000 you have in it. That's a whopping £2 per year. In case you hadn't guessed it, that was me trying to be sarcastic. Anyway, this is cheaper than the Vanguard option by just a tiny bit, but those 0.02% points do add up over time. You might be able to buy a Freddo or something in a few years. Now, just for reference, all of the funds I speak about today are available on Trading 212, InvestEngine, and any other decent brokers. And if you are looking to start a stocks and shares ISA or get started investing, feel free to check out the links in the description. I always keep the latest offers there for free shares or cash offers. Now, before we move on to other funds, let me just quickly drop in this one. I think it's actually the cheapest global ETF on the market from a reputable provider, the HSBC MSCI World ETF. This one has annual cost of 0.15%. The ticker symbol is HMWO. But do note this is a distributing one, so you'll get some dividends. I thought it was worth letting you know anyway, in case you do wanted that option and were challenging yourself to make the lowest cost portfolio that you could. This might be a good one. Okay, so that's the global ones, but what about some other major indexes where you might want to pick and choose and have a little bit more control of your own investments? Let's start with the biggest market of them all and head over to the US, more specifically, the S&P 500. So many of you may already know and invest in, just like me in fact, Vanguard's S&P 500 index fund, which trades under the ticker VUSA. But here's two options from other providers. First up, check out Invesco's S&P 500 ETF, which trades under SPXP. This has got a couple of nice benefits which makes it stand out from Vanguard's offering. First up, again, it's an accumulation version, so remember this one will just reinvest dividends for you automatically. And secondly, the ongoing costs are just 0.05%. So that means for every £1,000 that you have invested, a huge 50p will be lost in fees. Again, notice the sarcasm. Now, let's not pretend that Vanguard's option at 0.07% in fees is expensive, but still, help me out here, I'm trying to make index funds exciting. Anyway, you won't need any introduction as to what's inside an S&P 500 index fund, but if you are brand new to this and you're looking at around 500 of the world's largest companies headquartered in the US with many global household names. So again, you'll see the same familiar companies all arranged by their market cap for you, and always worth remembering that index funds like this change over time as smaller or weaker companies fall out and stronger ones get brought in, which is a huge benefit and helps keep you well diversified, which is another important topic that I talk about loads on this channel. And just before we jump over the pond, here's a second option in case you do want it for whatever reason, iShares Core S&P 500 ETF. Another accumulation for you with fees of 0.07%, which does match Vanguard's offering. And the ticker you're looking for here is CSP1. As you can see here, it's on InvestEngine, and then as you can see on Trading 212 as well. You've got to love the power of editing. Right now, I'm just pointing my fingers in the air at nothing. Speaking to a camera as well. Right, UK time, let's show the FTSE 100 some love here with this index fund that you can find under the ticker symbol CUKX. This is iShares Core FTSE 100 ETF. It's an accumulation one again and also has nice low fees of 0.07% per year. Now this matches Vanguard's VUKE fund if you want a comparison on cost, but it doesn't have the hassle of needing to reinvest dividends. Just remember that one. One good thing about the FTSE 100 is that it actually generates a lot of its income from all around the world, so you do get a decent amount of diversification here. It's also very popular with dividend income investors, as there are lots of companies that consistently pay out dividends if you're looking to generate a bit of income. Also, although you should never look at past performance as a reliable indicator about the future, as the saying goes, the FTSE 100 has been a little bit more stable place to be, at least when you compare it to the craziness that's happened across the pond in 2022. And this is really due to the fact that the companies here aren't particularly exciting ones in terms of growth, but that doesn't mean you still can't get them to help balance things out in your investment portfolio. As always, keep yourself well diversified. Remember to do your own research too, as I'm not a financial advisor, so please do seek out help if you need it. Okay, now let's fly to some very interesting places around the world and give ourselves the option to invest in emerging markets. 2022 was not kind to these stocks, and there was plenty of chaos as supply chains were put under strain and political leaders battled it out with each other. But on the flip side, and in the very long term, emerging markets could have some great opportunities for growth. So here's an option for you, and you'll need to look out for this ticker EMIM, which is iShares Core MSCI Emerging Markets ETF. This is another fund that accumulates and has a relatively low fee of 0.18% per year. There's loads of companies inside it too, more than 1,700 in fact, and we aren't exactly talking about names you haven't heard of. You've got big companies like TSMC, Samsung, and Alibaba. If you want the equivalent one from Vanguard, you'd need to compare this one to VFEG, which is slightly more expensive at 0.22%. I currently own VFEM in my Vanguard portfolio, which is what's available on Vanguard's platform directly, and I like to try and have around 12 to 15% of my portfolio exposed to emerging markets, but I might change that soon when I start to clean things up ready for the new financial year. Now look out for a brand new video very soon on the best platform and the best ISA that you might want to look into for 2023. Okay, these next two are bonus picks. Consider it your reward for staying this far. Up first, this one is for those of you who quite like the look of the Nasdaq index, which tracks the largest technology-focused companies in the world. It's got a lot of familiar faces that you'll also see in the Global Index Fund and the S&P 500, but it's much more concentrated in the tech sector, so it leaves out a lot of those companies from traditional industries. Now, you often hear people talk about the QQQ, and this is the US ETF that tracks the Nasdaq 100. However, as UK investors, we need to look for something else. So here are the two options for you. So firstly, if you want one that accumulates and keeps reinvesting your money, then this one might be a good choice. This is the iShares Nasdaq 100 ETF, which you can find by searching CNX1. It's got fees of 0.33%, so slightly higher than some of the indexes we've spoken about today, but then you'd hope there are potentially more gains ahead of you for an index like this. Also, if you don't want those dividends reinvested, then Invesco do have an option for you and kindly made a UK suitable version for us, which trades under EQQQ, so very nice and easy to remember as well. This one's actually a tiny bit cheaper than the iShares version at 0.3% too, but remember, just as I said, this will pay you out money in your account as dividends and not reinvest it, so just be aware of that one. Now, final one for all of you dividend hunters out there who might be looking to generate an income but let someone else find the stocks for you, then this iShares fund could be a good option, and I know for a few of you on this channel you have investments here. This is a UK dividend ETF that has about 50 shares inside of it, trading under IUKD. Now, the goal of this fund is to go and get you the highest quality yields for you and then put them all in one place so you can go back to enjoying yourself and not having to worry too much about your portfolio. The ongoing cost is 0.4%, so a little bit of a premium here to let someone else take the lead. And then the important part is that the dividend yield is currently around 6% and it's been relatively stable even when you consider there were some cutbacks in the pandemic of 2020. Now, as you can see here, you'll get dividend payments every quarter, so don't go spending it all at once. If you had £10,000 invested, 6% gets you £600, so if you divide that by 4, you'll end up with £150 every 3 months. So if you want more income than that, then you'll have to do the math and work out how much you're going to need. You might want to buy some more expensive things than some other people. Anyway, I hope that was useful. If you enjoyed this video and are still looking for some fund options, you can go back to my Vanguard video here to see some other options which might help get you started. And also, if you haven't already, I do have a complete beginner's guide here for investing, which I updated for 2023. Anyway, leave a like on the way out, subscribe for more, and as always, happy investing.